This is BYOB Market Talks. So what we're going to do for those of you all who are new to the call, we're going to show you the strategy this evening at the end of the call. We're going to definitely, good evening, St. Louis. We're going to show you the strategy at the end of the call. But because of everything that's happening in the market with the coronavirus, what's happening in the market, good evening, New York City, welcome. What's happening with everything that is actually transpiring with everything that's happening, I want you all to understand. I know we have some new people that have been joining the group. You seeing all the 777s in the chat. Everyone's wanting to understand what's going on. So I want you to kind of understand the psychology. We kind of talked about it on, I know, one of the calls. I know you guys kind of made some nice profit today. And I saw a few people trying to figure out how, why, you know, the market's falling, the market's crashing, wanting to understand, you know, how, right? Good evening, Baton Rouge. Nashville, by the way, of Baton Rouge. Good evening. You know what's going on. So this is Market Talks. I know you want to understand what it is. So we're going to explain that to you this evening, help you understand how that's happening, what's happening, and then we'll kind of touch on the strategy, right? We'll definitely touch on the strategy and help you understand that. That's where we're going to go from there. So this is the psychology of the market. Definitely want you to understand that. So as we get into the psychology of the market, I want you to understand a few things that happen in the market today. And so I want this in the back of your mind while we're going through that thing. So think about this. Right now, you have Disney, right? Disney, well, Carnival got some cruise lines that shut down first and foremost, right? Carnival has a few cruise lines that, shut down. They're not in operation for about 60 days. You have Disney shut down its parks in Paris and Florida, okay? Those parks are shut down. Canada today, their market, not their Dow, but their equivalent market to their head is worse, is down 12%, worse since what, 1940, I believe it is. The Dow had its worst day in history, his fourth day in history. I'm trying to make sure I say it right, okay? It had its fourth worst day in history, right? So that's what it actually had. So it actually fell 10%, 2,352 points. So that's the worst one-day percentage point since Black Monday. We just talked about Black Monday. And it lost like 22%. So that's the fourth worst day in history. So like, what is that? The worst day since 87 that it's had. So, but yet here you guys are making money, cashing out, right? You guys had a very, very, very good day. So when you really, really think about that and put it in perspective, it's kind of like, how did that happen? How are you doing that? What is it that you're doing? It's like, so how are you taking advantage of what's going on? And I want to talk to you about how, because if you open up any retirement plan right now, any 401k, I don't care which one you have, no one is happy about that right now. So no matter where you are in the world, nobody. The government even tried to dump, like, it was like $1.5 trillion, $1.5 trillion in liquidity into the market, and to try to stop what was happening today, and it didn't work. So but yet here you are cashing out. Here you are in profit. So let's talk about this whole psychology thing. This is the market. This is what the market cycles through. So whether it's 87, 2008, the market crash, that we all have been familiar with, or the coronavirus, or it's just a regular day that we don't hear about in the news, this is what the market cycles through. And, and this is what it goes through, and this is what you need to look for and be aware of. Because this is what it, and I'm gonna show you how the market goes through this on a regular basis. Now, this is where this disbelief is, and this is where you have this disbelief on this side. And then when you come back over here, you have this hope. And now understand the market pulls up slower than and it falls faster. You can and so it just depends on, it really just depends on, you know, what's happening on how fast it falls or how slow it rises or things like that. So then you kind of get this optimism, right? You kind of get this optimism where you're saying, okay, well, okay, this optimism, like, okay, is this really real? So, and you'll get the questions, because I've seen some of the questions that you guys ask when you know, when you see just a regular trend that starts to turn around. And I've seen some of you guys asking, like, oh my goodness, wait a minute. Should I really get in this trade? Because I wasn't sure, was this trend really about to turn around? And, you know, so you kind of hold off on a trade, or you kind of hold off on some things. So that's the same mentality. So remember, I told you, we ride the wave of the market, but you really have to understand that the people who move the market, we don't move the market at all. We don't have enough liquidity to move the market. You saw what we talked about. We're talking about the government is in a deficit on a regular basis, right? We talk about, oh, they don't have any money. They have money. Where did they pull $1.5 trillion from today, right? So where did that come from? So whenever somebody talk about they don't have money, let's just be real. They have some money. It was $1.5 trillion that they just found today and they dumped in the market. So they have money. So the market makers move the market. We ride the wave of the market. So it's all about understanding what happens. And then right before the call, I think I saw some of the conversation in the chat. And then you guys had some questions about why is the market so slow right now, or what's happening with the market, or it kind of slowed down. The best thing I could relate it to, and some of you guys who might not be my age might not understand, think about it. The market got a spanking on Monday. That was Black Monday, right? And we talked about how the market has to calm down and rest after it. So now it just came back. Think about when you were younger and you got a spanking, you had to go take a nap and you had to calm down. So now, you know, now we just got one. You know, the market just got 2 in 1 week. So now, it's going to slow down. It's going to need a break. It's going to relax. So it's the same thing. So now they're thinking, what do I do? Or how do I recover from this? Or, you know, the market, you got to think all these cycles. So now we're starting a new cycle. It's a new day because we're on UTC time. So a new day is starting. You know, the new cycle, the new day is actually the 13th. Now it's starting, right? The Sydney market is opening. And so it's kind of like, well, wait a minute. What do I do? You know, so they're starting their day over there. They're getting started. So they're trying to recover from what has transpired. They're trying to recover from what has taken place. And remember, we just had a really bad day on Monday. Well, we didn't have a bad day, so let me rephrase that. The market itself just had Black Monday on Monday, and then now they just had another day where it took a beating because of the coronavirus. So, but back to this, okay? So that's why the market has been moving a little slow. So, but yet you still cashed out on those trades. So the trade just took a little longer, and that's okay. As long as you know what, you know, you follow the rules of the strategy, you understand what's going on. And that's what we're talking about, what's going on right now. And then you still can drop your 777 in the chat. Instead of 5 minutes, it might have took you 45 minutes, but it's still a 777, right? So now you got your optimism. So here's your optimism, right? And so then you get, but now I believe it is going up. So everybody's buying, right? We got our 3 and we're at a 4-year. So this is really, we passed the 4-year and then so everybody got complacent. So, and I kind of want to point this out because this is what we were. We were sitting in this complacency, especially here in America. You know, everybody was talking about, we really we're up here, we're in this expansion where we were sitting over here in this nice prosperity. We were in probably one of the best places that we can be, the longest expansion that we probably had ever seen. You know, the market was really great. People were in a really good place that, you know, and so this really is where we were, you know. So we were sitting up here, okay, and we were sitting up here. And so now it's kind of like, what happened? So we met the coronavirus, okay? We met Corona. And when we met the coronavirus, it's kind of like, now what? Okay? Is the coronavirus, and you fall fast. Okay? So now we got the anxiety, and so it's like, no, the market's going to be fine. The market is going to be fine. So the market is going to be fine. You know, everybody doesn't want to believe what's going to happen. And then people go into denial. I'm not looking back. The companies are going to be fine. And then now you got the companies closing. Everybody, you know, all these things are happening. And so people don't want to open up their retirement accounts. People don't want to open up. But then what really spun it and what really made people say, wait a minute. So, you know, is when Apple made the announcement, and look, we're going to have to shut down some stores in China. And that's when everybody started, no, this is serious. If Apple is shutting down, Apple's closing stores, Apple's saying something, and that's when everything just hit the fan. And over here. And so that's when the panic started, right? That's when all this started happening. And so, you know, and everything just kind of started fumbling through. So, you know, I can't afford to lose more. I got to get out. And now people mad. Oh no, it's the government's fault. You know, we're going to blame the president. You know, this is, you know, like, okay, so who made the bat suit? You know, so it's just really, we just want to kind of put it into perspective of what's really happening. So now we're going to go through this cycle. And so this is really what's about to happen. You know, the depression, what's going to happen, because you're talking about shutting down, you know, you're talking about Disney shutting down, cruise lines shutting down. I mean, factories shutting down, you know, so service industry shutting down. So the aftermath, right? So you think about what we're doing on a daily basis. You think about the opportunity. What we're doing, businesses shutting down. So the NBA just shut down, right? They just had a game with no fans. So everything is going to get hit. You have to think about how that's going to impact the economy. So now, as we move forward, I want to show you, right? I want to show you that the coronavirus is just the big thing, right? It's a big thing. But I want you to put this on just a regular currency pair, the British pound and the Japanese yen, okay? And this is 2017. So this is not a big panic. This is not a virus. This is a regular currency pair. This is your everyday trading account. This is regular. So look what it goes through. So this is what I'm showing you. So that's why it's the psychology of the market. Because on a regular currency pair, doing normal, regular activities, look at the same cycle that this is gonna go through. So that's why it's the psychology of the market. So the market definitely goes through this same psychology. And you can see where it starts with the disbelief and it's gonna move up, okay? And you can see that it still goes through that same cycle, but then it's gonna drop even harder, you know, or it drops faster. The sales come faster, then the buys come up slower, they come up nice, but then the sale drops faster. And then as you can see how it moves over and then where it comes back up. So this is that same psychology of the market. And these are two different currency pairs. So you have your buys, it moves over, and then it comes down into your sell. And we can profit on a buy, we profit on a sell, right? And then I come take this same currency pair and I take it back to 2008. And what happened in 2008? That's where, I mean, even though this was still that, but what happened in 2008? In 2008 is when we had the housing crisis, right? Even though it's not our currency pair, but it's still the same cycle. So it's the same pattern, but even though it forms a little differently, it's not as dramatic, it's still the same pattern, right? Because we're looking for that pattern. So you can still see that same pattern. It peaks, comes down, and then it cycles back again. So you just have that same pattern that happens over and over and over again. Now I can come to the euro and the US dollar and what's happening with the market, right? Now this of course is before Corona, okay? So I have the same pattern. I start down here, I pull up, I peak at the top, get complacent, and then we fall. We come down, we sell. And so it's just to kind of help you understand the psychology of the market and what it does. And so when you're studying, you just understand that this is your lows, you come up to your highs, so this is a trend. And then you have your reversal, right? You have your reversal and it pulls down, right? And you have your downtrend. So this will be considered an uptrend. You have your market reversal and then your downtrend, but that's still that same psychology pattern. So in your academy, it's just gonna call it an uptrend. You call it a downtrend, but that's that same psychology of the market. And then of course, in 2008, what happened? It pulls down. It's the exact same thing. That's the exact same pattern. So before I go, do I have any questions or comments on this before we, because I want to show you something. Actually, before, now, any questions or comments? Because I do want to show you. So let me, I'm gonna stop my screen share, then I'm gonna come back. I'm gonna change my share actually. So do I play? What do you mean do I play? Do I trade? I don't do any calls on Friday, but I trade the market. I trade on Fridays. I gave a sale earlier. Okay, we're gonna talk about the strategy at the end, but is this your first time on the call? Is it your first time? Because I'll talk about the strategy at the end. On your MetaTrader 4 on your phone uses Japanese candles, and the strategy uses Hikinashi candles. And so you do not get Hikinashi candles on your phone. So they will never match. No, I mean, I was just asking specifically for that question because they will never match. Yeah, okay, so they will never match because on your phone is Japanese candles and the strategy uses Hikinashi candles. So you have to use you have to use the Hikinashi candles, which is on the you have to use the Hikinashi candles. Now, if you look at this right here, this is the actual Dow Jones, right? So if you look at how this had actually been rising, okay, you look at from when this actually got put on the market for trading. So you look at how this had been rising. So, and you see how, I mean, you had a dip right here, right? And it had a dip, and I'm on a daily chart. So just to kind of give you the big picture. So we had a dip back here, but that was it, okay? For the most part, I'm talking about a significant dip. So this will kind of show you the significance that the coronavirus has had. Now, if you think about that chart that we just looked at, okay, think about the significance of the market psychology chart that we just looked at. So we have been on a nice significant rise, okay, but you don't think that it, because it's the Dow Jones and it's the top 30 companies, you think that even though it's market psychology, you would think that it will keep rising to some degree, even though we have our spikes, because it's the top 30 companies. And what happens if a company doesn't perform? They get replaced. So it's always the top 30 companies, right? It's always to some degree going to always be the top 30 companies. So it's not like it's the same 30 companies where if somebody's not performing well, then we keep them and we have a measure where, like what we were looking at before, is the same two currency pairs where they'll follow that, and it's always comparing those two currency pairs. Where if I'm not performing, I get kicked out of the club, right? I get kicked out of the Dow Jones. So this, to some degree, is always has those top 30 companies. So this will show you, really you think about it, you're always will think that even with the market psychology chart, that unless it has something that's significant, that it would always rise. But the coronavirus is showing you that even with that, right, now we got that panic, that fear, and everything else. So this is not even immune to that market psychology chart. And, even though it hasn't been that affected. So we had that little dip and we had that expansion. And so here we have, so we've been walking around in this complacency, thinking that we're immune or thinking that we're fine because the Dow Jones, we just, oh, you don't want to perform, you got to go. We'll replace you with the top performer. And so now here we are showing that we're not immune to that market psychology, and that, hey, panic and fear can grab us too. And so this is why it's important to always understand that, hey, you want to be your own bank. You want to have the skill set. You definitely want to make sure you understand something different, because look, we're not immune, but look at how this is impacted, because this is the Dow Jones. This is what it is. And so, and look at how it has taken us, look at this drop. And then, like I said, this is that daily chart. And so we tried to rise back up a little bit, but what was that rise? That was nothing more than a correction in the market. So that's, an impulse correction. And now we're really sitting here at a continuation, and it's just a continuation to that drop. So we even passed that major floor that they had, that was that floor where they tried to hold it. And now we're even past that. So, and this is why they're trying to dump the money in the market, because where is the next major floor? Where is it? You're talking about, we got a little one here, but we still got a ways to go before. And if it break, where is this going? We've already passed that major floor. So where's this thing going? So this is what they're looking at. So you have these little floors that's happening here. You got another one here, but we've passed that major, where that other major dip was. And so now you're looking like right here, you got like one where it's at right now, this other one that's happening right here. That's not I wouldn't even consider that one. So we really got 1, 2, 1, 2. So this is a major one right here. This is really the only other major one, So we're sitting at 1, we got like 1, 2, really another big major one, but that's still far down. And so that's why they're pulling all these measures here to try to stop it. They really got to stop it, because you don't want to get to ground zero. That's why they're trying to stop this thing. So, and this is where we are. And this is that psychology of the market that you really got to understand and what's going on. So let me go back to the slides. Any questions? Questions, comments? Now this is where I want you to understand, because I think I saw some other comments. This is definitely something I want you to understand about the different types of analysis that you have. Now I'm about to show you the strategy, okay? I'm gonna show you the strategy, and understanding the strategy, right? You have your, no, you can't have my PDF. You're gonna have the recording that will be on YouTube when it gets uploaded a little later. And then you can go to the YouTube channel and you can watch it as many times as you would like. So now you can go to, you're welcome. You can, you have your technical analysis. So, and it's BYOB Challenge. That's the YouTube channel, BYOB Challenge. So you go to technical analysis. So the technical analysis is the analysis that that's gonna be the markup that we go over. That's gonna be the technical analysis. That's what we're gonna talk about, okay? Now, technical analysis is the analysis that is going to describe the strategy. And then you have your fundamental analysis, okay? Your fundamental analysis is the analysis that, remember, this influences the price, okay? These are internal factors. So for one, up until now, whenever we would do something such as that non-farmer payroll would pretty much be, that's that report that comes out the first Friday of each month. So that's pretty much what will give us a spike in the market, or maybe the news, for example. You know, we check our red folders before we start trading, or something of that nature. That might be the biggest thing that we're looking for, right? Those are the types of things that we probably would be looking for. So those are those external factors. But the fundamentals right now, that's what since everybody's pulling everything out of the market. So, you know, when you have the US 30 buying and gold is selling, or vice versa, but and gold and Bitcoin are normally going the same direction, you know, for whatever reason or something like that. But right now, everything, Bitcoin's selling. We had Bitcoin at the $10,000 mark, but Bitcoin is now around $5,000. I gave you guys a Bitcoin trade earlier. Gold, you know, marked up, looked like for a buy, but it went for a sell. Gold was selling. Gold is selling. Bitcoin selling. US 30 is selling, right? So everything is literally selling off right now. And why is that? People are pulling things out of the market because of the coronavirus. So, you know, so that's what fundamental is. And so this is why you always hear me tell you, no emotions. You have to sit down to be completely non-emotional when you're trading. You are non-emotional, because we don't move the market. You ride the wave of the market. And when you can sit down and you can do that, guess what's going to happen? Your profit is going to increase, because we just have to understand how the people who do move the market, how they feel about the market, right? How are they feeling? And when you can understand that, because it isn't about how we feel about it. We don't care how we feel about it, because we're here. We've stepped into an arena where we decided, I want to build wealth. You know what? I'm a master trader. I am the signal. All my trades in profit. So in order to do that, I am now, you know, I'm stepping into a financial market where I have made a decision. I want to build wealth. So because I made this decision, I declare and decree that this is where I want to be. And so I no longer am moved by my emotions, right? That means that I no longer can be moved by what I hear all around me. And so that means that I have to begin to understand, and this is where my opinions, right? My opinions don't matter. I have to begin to understand how the people who move the market, how do they feel? So technical, I'm about to show you how that works, right? That's the strategy. That's the BYOB cash out, right? That's the strategy itself. So once I go from there, the fundamentals is basically what can influence that. That's the coronavirus. And then how does the people who move the market, how do they feel about the coronavirus? Okay, so that's basically it in a nutshell. So right. So with that being said, ladies and gentlemen, do you have any questions, any comments, or anything on what we've covered? Because I really wanted you guys to understand, you know, what's happening. I just really wanted you guys to understand what's going on in the market, because this is how you put yourself in profit. This is how, when you understand, you get the big picture, you actually increase your wealth, right? Questions, comments, concerns, right? None, okay. All right, so let me go ahead and share my screen back with you. Oh, hold on. Well, hold on. Is there a specific question you have? Is it, I'm trying to get my screen share. Is it a specific? Oh, okay. Okay. Let me get my screen share back going with you guys. Because we're going to talk about the BYOB cash out here. Let me see. I know one of them had that. And I know we're also supposed to be, the market is kind of, like we talked about, kind of slow right now because of the impact that it had earlier. So what we're, like I said, what we're going to talk about right now is the BYOB cash out. And so I know we were going to try to pull some trades. You said they don't teach you that in college? No, they don't. Okay, so let me get this back up so I can see the chat. Okay. Yes, the market does sell faster than it buys. So it definitely does. What level? You talking about the US 30 or just you talking about the US 30? GBP is weak right now. GBP is weak. One of the things that the coronavirus kind of took out of the news is Brexit. So Brexit has already happened, but Brexit, they did Brexit without finalizing everything. So it's like they just got up and left. So everything did not finish. And so GBP is really weak right now. So even the things that were supposed to you know, yeah, they just got up and left. They didn't finish everything. So it's like even when they get it's like they get weak. They keep getting weak. It's like they'll go to the table and then he'll make his demands. And so, but coronavirus kind of took that out of the news. It's kind of muted that for right now. And so, but they still, it's kind of a backstory right now. So GBP is really, really weak right now. So I still kind of keep my eyes on GBP. And so if you look, that's one of the ones that's up here right now. So GBP is just really weak. So, but even still with that, let me use this one as an example because you can still and so I'll talk through this so you can, even without knowing that, you can still see how it's a sell. So let me talk about that. So in understanding this, you know, in understanding currency pairs, we do have some new people on the call. So I'll break this down just a little bit further this evening. When you're trading, you have two currencies, okay? You have two currencies. And the two currencies that you're trading are listed right here. And what they are is this first currency is your base currency. The second currency is what's called your counter currency, right? These are your two currencies. So this first currency, your base currency, if this currency, technically if this currency is stronger, it's if your pair is a buy, right? If I'm gonna enter a buy order, that means that this first currency is stronger. If I'm entering a sell currency, that means that this second currency, my counter currency, is stronger. So what the BYOB cash out is, what you're looking at right now is GBP US dollar. If my base currency, so basically I've got GBP USD, and what you're looking at is three indicators. I have my stochastic, and I have my Hikinashi candles, and I have my PSAR. And so before I get into how to trade this strategy, for the person who asked me about the candles, understand these are Hikinashi candles. If I switch to Japanese candles, this is what a Japanese candle looks like. So I'm not doing it while we're trading this. So this is a Japanese candles. Japanese candles, you have to try to go back in and figure out which one is which, when do I enter the trade, what is it telling me, different things like that. Well, Hikinashi candles are bottom line up front. They're a lot smoother, right? It cuts out the middleman. I don't have to figure out, it's like playing tug of war. What do I do? What is this telling me? Do I gotta wait 2 or 3 candles? Which one? When do I get in? When do I get out? No. Hikinashi candles are actually indicators. They actually smooth out price action. You know, I don't have to try to figure all that out. Basically, you see how nice and smooth they are. They're an indicator that's done the calculations for me. So that's why I use Hikinashi candles. Now, and they're not on your phone. So you cannot go looking on your phone trying to get it figured out for you. That you're not gonna find them on your phone. That's not gonna happen. So you have to use them. You have to use them on the vibrata or something. So you just have to use them here. You're not gonna be able to use them on your phone. Now, the first thing that you're looking at is your stochastic. You're looking at the stochastic because the stochastic is a leading indicator. The Hikinashi candles and the PSAR are lagging indicators. The stochastic is a leading indicator, and with the stochastic being a leading indicator, what that leading indicator is telling me is, first things first, I'm going from, if I look over here, I have this going from 0 to 100. Now, first thing is, if it's at the 80, you see this shaded area goes from 0 to, I mean, it goes from 0 to 100, but my shaded area is 20 to 80. Now, I'm looking, this says from 20 to 80 is my shaded area. If the stochastic, the blue line crosses over the 80, if the blue line crosses the red around the 80, I'm looking for a sell. Keyword around, but I must have a blue line crossover around the 80. That crossover is a must, right? So, and you're right, I'm on an hour. Thank you, I didn't switch it. So we're gonna come over here a little bit. So blue line crossover the red around the 80. That crossover is a must. So right here, blue line cross, you see how this is setting up. That blue line cross over the red, blue line cross over the red around the 20. That setup is a must. So I'm gonna switch back to the hour, pretend like I'm on the 15 just to show you something. You see how this is around the 20? If I was on a 15-minute chart and that's around the 20 and I did not have that crossover around in the upward momentum, see, I can be at the 20, but I have to have that crossover in the upward momentum, okay? I must have that crossover in an upward momentum like I have here. That's very, very, very important, okay? I must have that. Now, when I come back here, okay, we're gonna come back here. Now, I got that blue line cross over the red. Now understand, we would be looking at a live trade right here. What I'm looking for, I'm showing you a trade that's passed because we're training. And I want everybody, right? And I want you all right here. So now, right here, right, blue line cross over the red and a downward momentum. Now I got a red candle. So once I know that I'm looking for a sell setup, right? I know that I'm looking for a sell setup. Now, I want you to look at the red candle with I'm looking for a sell. So now I begin looking for everything that goes with a sell. With a sell, right? And I'm on the top, so I'm looking for everything that happened on the top. For a sell, it's a red, simple as this, a red candle with a flat top, right? PSAR on the top. Hikanashi candle red, PSAR on the top. So, you know, I would not have seen any of this. So if I pushed it over. So you know that flip happened right there. Then I would just have to wait a minute or so, right? So each one of these candles is 15 minutes. So that just took me a few 15-minute candles. And then I now have a red candle with a flat top and a PSAR on the top, right? So now I'm gonna put an arrow here so you're all with me. Okay, I'm gonna put an arrow here so you're all with me to where we can see this. Now, we have a valid trade setup, okay? We have a valid trade setup, So with a valid trade setup, however, what you do understand, we're on a lower time frame, right? Lower time frame. What you do understand is that my lower time frames really don't give me the understanding of what the market is doing. My higher time frames tell me where the market's going. My higher time frames tell me what the market's doing. My lower time frame, I don't know if I'm trading a correction. I don't know if I'm trading with the trend, right? I just know that I got an opportunity for 10 pips and cash out. I just know I got an opportunity to grab some pips and get in and out of the market. So you want to know what the market is doing, right? For a higher, to increase your accuracy of a trade, right? You really want to know that. So, because remember, we were here. We didn't know what the rest of the market was doing. We had no idea. So this is where something called time frame confluence comes in. So with time frame confluence, what I want to do, remember, 5 minute feeds into each time frame. Each time frame is each candle, each time frame, the candles on each time frame, like the 5 minute, each candle is 5 minutes. On the 15 minute, each candle is 15 minutes, 30 minutes, and so on and so on. So if I flip down to the 5 minute, right? Flip down to the 5 minute. I flip down to the 5 minute because do you want to enter in a correction? So, because you know you'll have that pullback or what have you. So if I flip down to the 5 minute, I know I can enter and I'm not in a correction. Now, if I go up to the hour, now I want to go up to the hour. Anytime I do that, I'm going up to the hour because it's a factor of what we call 4, 5, or 6. What's a factor of 4, 5, or 6? That tells me that's the time frame. So like if I'm trading on a 15-minute time frame, that's gonna let me know where my swing of the market is. So I jump up, so from the 15-minute, I go to that 1 hour time frame to understand what's my current swing of the market. So I know currently at the hour, then I know that my current swing of the market is in a sell. So at that point, I can go in the market, I can market execution, get my 10 pips, set a take profit for 10 pips and cash out, okay? At that point, my stop loss, I trade with you, not for you. So if you are new to BYOB cash out, we don't do signals, okay? I don't give you your take profit. I don't give you your stop loss. I don't give you those things. You set them for yourself. You are the signal. That's why you see so many 777s in the chat, because everybody has learned how to become their own signal. So your stop loss, for a sell is above the PSAR. Your PSAR is a trailing stop loss, right? It is a reversal in the market. It is a trailing stop loss. Your stop loss is above the PSAR. If it is a buy, your stop loss is below the PSAR. Now, for your 10 pips, you will hit market execution. When you hit market execution, you see your MetaTrader 4, okay? In your MetaTrader 4 on your phone, where you enter the trade, the number you enter the trade, the left hand number where you enter the trade, that is where you would count your 10 pips from. Your take profit is 10 pips from there. You do your take profit 10 pips from there. Okay? You do your take profit 10 pips from there. So that will help you with that. Now, if you want more than 10 pips let's check the 4 hour. So I want more than 10 pips. We need to understand, if I check the 4 hour, my trend in the market is also in a sell. Then you want to go watch that playlist on the swing of the market as well. I want to know where my trend in the market and everything else is. So I also want to know that I'm also in a sell on my 4 hour as well as my hour. And I want to know where my stochastic is as well. This one, my stochastic wouldn't already be all the way at the bottom, right? You would be checking to see where your stochastic is. Make sure your stochastic is still going into a sell. On a 4 hour, this is in a sell. And you would utilize your support and resistance lines to set your take profit. So that's how you would do it. So you would have set your take profit at a support and resistance line, but you would have to understand support and resistance lines to actually do that. And the Korean market, the Korean market just halted. The Korean market just halted. The Korean market just dropped 8% and it just halted. So you see why the market is so slow? Okay, so that in itself is the BYOB cash out. So understand, if you are doing your 10 pips and cash out, you wouldn't even go to the 4 hour. You would have just checked the 10. So any questions or comments? Any questions or comments? We got about 5 more minutes before we transition this call. Okay. Personally, no, because I educate. So, I mean, when I started trading, I did, but because I educate, I don't. And that do I like the pairs I do like? I mean, I like all of them now, honestly. Well, not CHF. And that's because of the liquidity that they have in the market. Now, so to answer that question, so I'll type it in. So to answer that question, because I have to have the flexibility to be on here to kind of go through them, because I have to have the flexibility to be able to go through the pairs on here with you all, I can't stick to just a few pairs. You know, I have to be able to go through there. And then because we go through here and we use the tools, you know, I kind of go through here and, you know, like we were supposed to be on here, going through here tonight, tonight was supposed to be going through here, pulling these pairs, you know, and pulling these pairs and actually trading some of these pairs. But I shifted that because it works on everything. But I shifted that because of the market, and I wanted to give a good understanding of what was actually happening in the market to give you guys a clear understanding of what was happening in the market, right? Because we were supposed to be we did this on Tuesday, and we were supposed to come back to this. And you see, when I pulled this, there was nothing on a long-term trade that's in there because of everything that's happening right now. So we got great scalping opportunities, but as far as long-term trading, because of everything that's happening. So, I mean, you guys made a lot of money, and then they just halted the Korean market. And even this morning, I think you guys, what was that? And within like 2 or 3 minutes, wasn't even a full 2 or 3 minutes, what did the market drop? 650 points for us this morning at 9:30 when we were on the call. So if you were able to get in, because I know some of us, I think I got about, was I able to get about 300 of them? I don't know. I think I got maybe about 300 of the points. By the time I was able to get into the trade, I caught about 300 of them. I think some of you guys got, I don't know, was anybody able to get about, because that initial drop was 500. So that initial drop was 500. And then they stopped it after, they stopped it around that 650. But I know I told you guys that the market was going to drop about 650 points. And it did, and that's when they stopped it. Yeah, on the US 30. So on that 9 o'clock call, so when we had that opening bell, we were able to jump in the US 30, and it dropped 650 points within like 2 minutes. Within like 2 minutes, 2 or 3 minutes, it dropped 650 points. So let me see here. Let me see. We got, what's the other question I had? Let me. I know, so yeah, I was only able to get like 300 of them. But I know some of you guys got some of them too. By the time my broker let me in, I only got about 300 of them. Oh yeah, you did ask that question, US 30. So it's just you just type it's US 30 right there, US 30, just like that. So let me see. So, the Canadian Prime Minister wife test positive for the coronavirus. So you got that. And then we have, let me see. Oh no, crypto is the same way. It works the same on everything. You can trade stocks, you can trade, I mean, everything that you see right here, everything, stocks, everything that you see on here, you can trade. BYOB Cash Out works on everything. So whatever your heart desires, you can trade it. And then, they got that bill signing for 6 leave. Oh no, that's just, they're not gonna work. So all those not gonna pull up. They'll tell you it's not gonna work. So I don't know why they have it loaded in there. But honestly, you have different things in there, and they're just different brokers. And yes, it can be scalped. And you will see me do it on a 5-minute time frame. So if you're scalping it up, and I didn't click it. So if you're scalping it, it's just scalped on a 5-minute time frame. And so you just use the time frame Confluence. So I'll drop down to the 1 minute and come up, check it on the 30. So it's this exact, everything is the same way. So if I'm on a 5-minute, right, and we're about to transition the call, but if I'm on a 5-minute, I'll drop down to the 1 minute with the exact same rules that I just gave you and a factor of 4, 5, or 6, and I'll come up. So, oh man, well, guess what? Now you can get it back. So yeah, you are so welcome. You're definitely welcome. You are so very welcome. But all right, ladies and gentlemen, you are very welcome. You are so very welcome. So you are so very welcome. All right, so, and you are welcome. Oh, well, I'm glad your first time and you'll be back from now on. I'm very glad you'll be back. That's what we do it for. So, but before we transition this call, do not go anywhere. Do not go anywhere because it is time for a talk with the finance doctor, right? It is definitely time for a talk with the finance doctor. But I have something I want to share with you before. London getting on the team, right? That's awesome. So it's something I want to share with you before